Hey everybody, Coach D here with TackleTrading.com. I'm going to do a quick video on how to place a trade with an automatic trailing stop. And I'm going to start out here with our weekly stock report where I've got a handful of really nice positions. We talked about scaling in on this stock report. And I was looking at some of these candidates here on the list, and I really like BGS. Let me zoom back in on that so you can see it. So I was looking through the list, a handful of these are fired, like AIG popped up, Applied Material popped up, ATVI is actually selling off a bit, Etsy's moving in the right direction. I like this BGS chart. Nice little bullish retracement. It's got the upward confirmation today. So if you missed the initial entry trigger on that with today's confirmation, I think we can go ahead and actually plan and place a trade on that. So I've got the chart of BGS open up, and there's our upward confirmation. So we can actually just go ahead and buy the stock. If you want more confirmation, you could wait for it. You could put a buy stop out there. But I'm just going to go ahead and set up a buy order with the trail stop. So I'm just going to go right-click and go buy custom with the stop. Now I'll go ahead and enter with a limit order at the current price. Let me unlock that. And let's see, we can get that mid price down to $22.97. I think I'll drop that down to $22.95 and see if I can get filled on that. And then I'm going to change this stop order. I'm going to make it a trail stop. And I'm going to make both of those orders good till canceled. Just make sure I've got the right time and force. Now, how far should I make the automatic trail stop chase behind the stock? I can do it by points or percentages, and I'll just use points. I'm going to use some simple numbers here. So let me explain my logic for you on how far away I'm going to put that stop loss. The first thing I want to know is what is the average true range? And I have this little custom indicator up here in the top left. This is going to give you a number similar to any other ATR, average true range. And it's saying that the stock average is about $1.29 between the daily candle high and low. And that's a 14-day average. So if I put my stop loss any tighter than $1.29, the odds of it getting hit within 1 day increase. So I'm thinking I'll probably do at least $1.30 plus trail stop. And that'll give it at least one ATR trail stop. Maybe I do $1.40 just to give it a little bit of room to breathe. The other number I have here that helps me make decisions is what's called the expected move, and this one says 75 cents. Well, that's based off of the options implied volatility, and it's an estimate. And between those two numbers, I can usually come up with a pretty good distance to stop loss. In this case, I'm going to give it room to breathe. I'm going to give it a little bit more than an ATR. So I'll bring that ticket back up. And what I'll do here is I'll make sure that that chases the stock by 10 cents more than the ATR. I'll go $1.40. So it'll trail by $1.40. Now, if I wanted to change that to a different method, I could change it to percentages, like 1%. I can set it by plus or minus points, and so I'll reset that to $1.40. And it's just relatively easy to set up that trail stop. So I've got my buy order and an automatic trail stop. And I'll make those good till canceled. And that may take a minute in order for it to get filled. So I'll go ahead and send that in here and see how long it takes us. Oh, hey, we got filled quickly. So there it kicked in just like that. Now we got our trail stop kicking in, and it just kicked in $1.40 lower than we got filled at. And so if the stock price continues to rise, it's going to tighten our stop loss up for us. And what I'll do is I'll maybe do a little time lapse here and see if we can figure it out. I'm going to go put a little line on the chart, and I'm going to just highlight and put the line where the stop loss is at the moment. So I'm just going to set a line right there in the sync with that existing stop loss. And then what we're going to watch for is whether or not the stock price rises. If the price continues to rise, that automatic trail stop will move up behind the stock. It'll stay $1.40 behind the most recent high. So we'll keep an eye on that and see if it moves, and I'll come back and update this video momentarily. So we've had a phenomenal day on our BGS trade. Our trailing stop is working just perfectly, like a dream. And you can see that here. Let me go ahead and get to the chart with the moving averages on it. that little line drawn on the chart, that's where our trailing stop originated. You'll recall yesterday we put in a buy limit order on that upward confirmation candle. The trade got filled at $22.94. And the trailing stop has come, and it's been, if you look at it here, you'll see it's down $1.40 behind. That's what we've trailed it by. So $1.40. You'll recall that from earlier in the video, obviously. Well, the market popped up, ripped up to this new high, and it's established a new high of $23.98. So the trailing stop's $1.40 lower than that high. And we're not too far off the break-even point. Again, the cost basis on this trade is $22.94, and the trailing stop is in that $22.58 ballpark. So right there in that $22.58 ballpark. And that's just 30 some odd cents, 36 cents. So you got $36 of risk left in a trade. And I think if this can rise to our reasonable target of 25 up to 26, maybe with a little bit of luck out to 27, you can see where our reward to risk ratio has gotten really favorable right out of the gates. Well, right now we're up 90 some odd bucks. Our risk is down to 30. So we already have a decent return on the ratio, the risk ratio. If we get a rise out to 25, the trade will make 200 bucks. If we get a rise out to 26, it'll make 300 bucks. If we get a rise out to 27, you'll make 400 bucks. So the nice thing about that trailing stop, that auto trailing stop, is it reduces your risk right as the trade confirms in the right direction. So the trailing stop is working perfectly. In order for that to continue to rise, the stock price has to go in and take out the intraday high. So in order for that trailing stop to continue to rise, it actually has to go take out that high price it established at $23.98. And if it goes $23.99, 24, that will start moving the trailing stop up for every penny it reaches above that high. So I hope you enjoyed this video on how to use a trailing stop loss, that you like this little example. Again, the stock pick came from our scouting report. And if you like this video and you enjoyed it, go ahead and click on like and subscribe. We'll be putting out more video content like this, and we have our daily halftime report live on YouTube every day.